Welcome to the podcast Coins. I'm your host, Patrick McLean, and I'll be joined by a panel of experts.
Happy to be here with Dave Jevons,
Eric Voorhees.
We have Paul Brody, Kosala Hemachandra.
I'm Nick Carter.
My name is Bill Barheit.
I'm Asif Herji.
My name is Luke Kerner.
Here today with Roger Ver, Nathaniel Popper, Alex Mashinsky. So I get to sit here today with Charles Hodgkinson.
And on this episode, we will explore an evolution in the blockchain space as the rise of Bitcoin spurs the birth of Ethereum.
Bitcoin is a simple network that does one thing very well. It allows anyone to exchange value over the internet in a private and secure way with no middleman making the rules or taking a piece of the pie. In this episode, we'll get the story of Ethereum, a new cryptocurrency that was first conceived in 2013, touting itself to be an improvement over the functionality of Bitcoin, the peer-to-peer currency. But the truth is, Ethereum was aspiring to be much more than that. Ethereum had its sights set on becoming a world computer. Now imagine a super internet with many layers of skin beneath the surface. Now imagine further that one of the layers is an algorithmic artificial intelligence contract attorney that could settle a payment dispute between two human beings in a matter of minutes. Or perhaps this computer could act as the executor of your will, or could settle your insurance claims, all without any third-party human intervention. Ethereum, you see, was promising to be everything Bitcoin was and more by making any kind of transaction that takes the form of person-to-person agreements programmable, fast, secure, and automatic. But unlike Bitcoin, the identity of Ethereum's creators was well known, and inevitably philosophical differences and a clash of character between these creators would threaten to derail the success of this new kid on the block and its lofty aspirations. In this episode, we'll learn about the genesis of Ethereum and whether or not it had the wherewithal to weather the internal storm.
Can you kind of frame for the audience, like, what is Ethereum and how is that in core ways? What are the traits that they have that are different?
Yeah, so I'll explain sort of how Ethereum works, but first, you can think of Bitcoin as a blockchain that basically has one purpose, which is to be a great form of money. So you can think of it as like a dumb blockchain, and I use that in the best sense of that term. It's just trying to do one thing really well. And anything more advanced than that is very awkward to try to build on top of the Bitcoin protocol. Ethereum takes a different stance. Ethereum is trying to be a general purpose blockchain. So you can use Ethereum to build all sorts of decentralized applications, not just money, but all sorts of different financial applications. It's a trade-off because the more complexity you add, the riskier the entire blockchain becomes. And so it is not correct to say that Ethereum is better than Bitcoin just because you can do more on it. It's a trade-off. And I think this is why these are really good complements. I think Bitcoin has established itself as a very simple, true-to-purpose form of digital gold and is doing a very good job with that. Ethereum is doing a very good job of being a global, decentralized, general-purpose computer where anyone can build applications and run them. So I'm glad that both exist, and I think the ecosystem is healthier for it.
While Bitcoin is effectively evolving as digital gold or money for the internet, right? Ultimately, the ability to send money person to person, but also simply maintain a safe and secure and store of value that actually maintains its value, which is a novel concept, right? Ethereum is actually evolving to be what we call the world's computer. Ethereum was the idea that we could extend the programming language of Bitcoin to do anything. Now, that has a lot of challenges associated with that statement. While on the one hand, Ethereum is in many ways way more powerful than Bitcoin, right? And ultimately, I do believe it will be successful as what I call the world's computer.
Bitcoin offers you some rudimentary contract types such that you can encode specific instructions into the coins themselves, which define a set of conditions under which those coins can be spent. Ethereum goes far, far beyond that to basically add this sort of rich, expressive layer to transactions such that you can build really complex contracts directly into the blockchain itself that can be executed sort of autonomously. So the whole idea behind Ethereum is that Bitcoin is a little limited at the base layer, and that we should add in this sort of transactional richness such that you can do a far broader set of applications than just send money back and forth.
I've heard Ethereum described as like the world's largest supercomputer. Can you speak to that at all?
Yeah, well, probably a supercomputer from like 1960s. It's a really slow supercomputer, if you want to think about it that way. But for those who are familiar with like Turing and like Alan Turing, and like it's a Turing complete computer, meaning you're not limited by anything. As long as you can build, or like it's logically possible to build, Ethereum is the platform to build it. Like if you, let's say, came up with, I mean, you can build Bitcoin inside Ethereum in like 10 lines of code. So that's how powerful Ethereum is. And that's what makes it a computer. That's what makes it a good machine, because you can do things, you can build things.
Ethereum looked at the same kind of advances that came from Bitcoin and said, that is amazing, but more things could be done. Instead of just keeping track of an asset, what if we could define any asset? And instead of just having a single asset, not only can we have many assets, but we can think about how we distribute business rules and workload across those assets. So I think Ethereum was a very logical building atop of Bitcoin, but it created this programmable environment. And if you want to think about business process and how companies work together, which is a lot of what I spent many of my almost 15 years at IBM doing, you look at that and you're like, oh my gosh, finally a neutral, decentralized infrastructure where multiple companies could work together. This has got to become immensely valuable.
The two best use cases that most people will understand. One is Bitcoin, which the use case there is to me at least, is store of value, right? Think of it as digital gold if you want to conceptualize it that way. And the other is Ethereum, which is effectively the .NET, or that's too technical, sorry. It's a programming platform for crypto applications. So it's trying to be the thing that other crypto developers build their applications on top of. And it's got great traction. There's thousands of applications on it. There's billions of dollars that trade every day on it, and it's also got traction. And so that's the way you should think about it. Is different crypto projects are basically different use cases.
Well, when we entered, there was really just Bitcoin, and we were starting to think, okay, Bitcoin is great, but it's very computationally intensive, right? If you have a small device with a little battery on it, you can't use that. And somebody said to me, there's this guy, Vitalik, he's creating this thing called Ethereum, and it's not about money, it's more about kind of a computing infrastructure, and we just thought that was amazing.
Can you kind of walk me through what you understand on like the origins of Ethereum? Like, when did they start developing it? What did that process look like?
As far as I know, this is like the earliest knowledge that I have about Ethereum, is that Vitalik came up with the idea of, okay, like, I think he was already into Bitcoin when he was like 17. I think by like 17, he came up with the idea of a computer, a decentralized computer, and it can work. And at some conference, he gave a speech about it, which is amazing for a 17-year-old. So that happened. And then he met Gavin. Gavin is more coming from like a more experienced and educated. He has a PhD. So he knew exactly how to put it together and like put it into a research paper, or the yellow paper that we call it. And they were able to come up with a small enough group that was ready to develop, like do proof of concepts.
Got contacted by a guy who consumed my content, Anthony Diorio. And he said, hey, I run the Bitcoin Alliance of Canada, and I love your educational stuff you were doing on Udemy. Can we use some of that material for BAC? And I said, sure. And then we started talking almost every week. And then eventually he said, hey, a side thing. It's a very small thing. There's this kid who's 19 years old who keeps coming into my meetup groups. His name's Vitalik. And he's got this paper called Ethereum. Can you look at it and let me know if you think it's any good? I'm thinking about putting some money behind it. So I said, sure. So I looked at the paper, and it was like an overlay protocol on Primecoin. It was not like revolutionary, but I thought there was something really cool there. And I said, all right, well, what do you want to do with that? And he said, well, we're having these weekly meetings and there's a few other people showing up. Would you like to join them? I said, okay. So it was Mihai and Vitalik. They had started Bitcoin Magazine together, so they'd been friends for a while. Amir Shetreat, who worked with Vitalik on Mastercoin and Color Coins, because I think Vitalik was doing some code for the Color Coins project, and then Anthony. So I was the fifth guy to join the meeting. And so we started having meetings and talking, and then eventually Anthony said, look, we all have to meet each other. We all have to meet up and do something. So let's fly to Miami. And I said, well, when? He said, January of 2014, that's where the North American Bitcoin conference is. I'm invited to speak. Vitalik's invited to speak. We'll announce this Ethereum thing to the world and we'll see what happens. And I said, okay, should I get a hotel? And Anthony said, no, I'm going to rent a beach house and everybody's going to come to the beach house. We're all going to sleep together in the same place. And we're going to see if we're assholes or if we like each other. And if we like each other, we'll do it. I said, okay, what do I got to lose? So I bought a ticket to Miami. I flew there. I also got a rental car and I acted as kind of the chauffeur and chief. And I was shuttling people between the Miami airport and the beach house. I got to know that airport really well. And Joe Lubin went there and a lot of other people like Gavin Wood, who had been in the Slack channels, Skype channels, was there. Because at the time we didn't use Slack, it was all Skype. We moved over Slack later. And these types of things. We announced Ethereum at the North American Bitcoin conference and it got like a rock star style reception. So many people were so excited and it became very clear that we had something real there. So we had a discussion in Miami about, well, what do we want to do with it? And I said, well, if we're going to do something, we should set up a company. And they said, well, where should we do it? So we started talking and we said, well, outside of the United States is probably a good place to do it. And my job was to kind of set up the legal corpus for Ethereum. So first off, we had to teach the lawyers what was a cryptocurrency. So I downloaded Jerry Brito's paper, Bitcoin, a Primer, because he was a law professor at Mercatus. And now he runs his lobbying group, Coin Center. And we started from that as first principles. And I'd sit down every day with Luca and just teach him and he'd read page after page and we'd talk about it. And then eventually we said, he asked, well, okay, now that I understand this, how are you guys going to finance? And we said, we're going to do an ICO. We're going to go ahead and do a token offering. He said, well, what is that? I said, I have no idea.
But they realized they need funding and they did go for the pre-sale. They asked the public, hey, we need funding. This is our project. This is what we feel like blockchain can be. And if you're willing to fund us, we'll be able to make it happen. And that's basically when I got in.
And I said, well, I need a really good US securities lawyer. Can you refer me to somebody? He said, oh, I know a really good guy. His name's Joseph Grunfest. I said, who's that? He said, well, he used to run the Securities Exchange Commission. I said, okay, that's probably a pretty good guy. He probably knows what's going on. So I called up Joe and I'll never forget this meeting. This was probably March of 2014. And I explained everything that we were thinking about doing, like this ICO idea. And I talked very fast. And so I was going through this whole thing. It was late at night for me. I drank too much coffee, going on and on and on for like 45 minutes. And I got disconnected. And so when I called him back, I said, hey, where were we? And he gave me the most beautiful 30-second summary of everything I said in 45 minutes. And he did all of this while waiting to go to a tennis game. So he was like, wearing his shorts and everything. So just a brilliant, brilliant guy. And so at the end of the whole thing, I asked him, what do you think? And he said, well, if you tilt your head to the left, it's a securities offering. If you tilt your head to the right, it's not. So I said, what should we do? And he said, well, you could ask the SEC and they won't tell you. They won't give you no action letters. So the best thing is maybe you go to a law firm and you get a more likely than not opinion about whether it's a security or not. And I said, well, what's the downside of it? He said, well, they don't have to tell you what you want to hear. In other words, it could be a security and they'll write that in and you'll waste all your money. So we talked about it, and there were a couple of different paths before us. One was to do a not-for-profit company and do an ICO, so like a foundation and an ICO from it and fund it. And the other was to do some sort of hybrid model where we'd use venture capital money. We'd build it kind of like what Ripple is doing. And then once the private company had created a product, then do an ICO from a foundation to kind of distribute the token amongst everybody, or launch it like Bitcoin had launched, where it had no distribution and maybe there was a pre-mine or something. So I favored the for-profit side because we had a lot of capital interest. We had talked to Google Ventures, and right around that time, Blockstream was raising capital. And I thought for sure we could raise about 25 million with the idea we had and the traction we were getting and so forth. And the other thing is that I said, well, if we don't have a company and it's not for profit, there's no golden handcuffs. There's no reason for people to stick around. So if you do the ICO, it's like the minute you pay people up front, they leave and they'll go do something else and compete. And there's 8 founders. It's like, we'll have 8 problems at some point. So we fought and fought and fought, and there was just months of meetings about the pre-mine and months of meetings about the distribution. In the meantime, I was doing some diligence with a law firm called Pryor Cashman in New York to basically get that more likely than not opinion about what the security status was. And that was really deep technical legal work, and it was a tough time. So eventually it came to a head in June of 2014, and a decision had to be made. And we called it the Crypto Mozilla or the Crypto Google decision. So Mozilla is like an open source company. It's a not-for-profit. They build a browser. Google's a for-profit company, but it makes open source software like Android. So I said, let's do the Crypto Google. And other people said, let's be Crypto Mozilla. So Vitalik had to make the decision, and he made the decision to be Crypto Mozilla, and it kind of split up the business side from the tech side. The tech people took over, and the business people very quickly left. So that day, Amir and I were gone, and within just a few months, Joe Lubin was gone, and a few more months, Anthony DiOrio was gone. Mihai kind of hid in Switzerland, and the tech people around for a little bit, and they just turned on each other. And to this day, Vitalik is the last one left, and all these 7 other founders are gone. And there's 2 cryptocurrencies that compete with Ethereum now: Gavin's Polkadot and Cardano for me. So it was a really interesting time, and it's hard to say who was right. Ethereum's a $200 billion ecosystem, and they've accomplished amazing stuff, and they've grown by leaps and bounds. Would it have been better with Consensus and IOHK and Parity Labs all bundled together into one company and all of us working together? Or would it have been better with the configuration that Vitalik had? I guess that's one for the ages. But I was only there for 6 months, and what's really sad is that the majority of my career has been not in Ethereum, doing non-Ethereum things. But yet the thing that tends to define a large chunk of my career is Ethereum.
Why is it so many Bitcoin supporters don't like Ethereum?
Well, Ethereum was initially released as an initial coin offering, right? So there was a sale, and that, there was a treasury, and there was the Ethereum Foundation, which managed that treasury for a long time. Remember, Bitcoin, the leader, Satoshi, left. He sort of left Bitcoin to its own devices, and there was no initial sale of the Bitcoins. It was just released, and anyone could mine them. So Bitcoin's issuance model is really different from Ethereum's. Ethereum's was much more corporate in nature, much more concentrated, and arguably Ethereum leadership and governance has still remained much more consolidated than Bitcoin governance. There's also a completely different design philosophy. Ethereum has frequent changes and updates to the protocol. They call these hard forks. Bitcoin culture, development culture, really discourages this. It's much more focused on security first. And so the 2 cultures could not be more different. And so you'll find more people that are in one camp or the other, as opposed to people that are sort of fans of both systems, because the underlying value set is dramatically different between the 2.
There's a term, and some people watching this might not know, so we're going to educate them. I think people say Bitcoin maximalism. It's kind of this can be a broad debate, and I think you've probably entered the arena more than once in that conversation. But can you kind of walk the audience through in the most basic terms what this argument is?
Yeah, Bitcoin maximalism is basically the idea that Bitcoin is the only valuable digital asset, the only one that people should care about. And every single other digital asset of any kind is either a scam or completely worthless, or you should just ignore it for various reasons. So if I'm going to make their argument for them, the reason that Bitcoin maximalists exist is they believe that Bitcoin is by far the best cryptocurrency as a form of money, and therefore spending time on anything other than that is a distraction at best. They believe anything that people build on other chains can be built on Bitcoin eventually, and so why build these other chains? And to their credit, they rightly point out that a lot of the other projects are stupid or scammy, and they're correct about that. A lot of them are.
Are you surprised by that reaction? Because this community seems to, in theory, be open and disruptive, and almost like they're drawing a line in the sand now?
It's bothered me a lot because I see this infighting among these crypto tribes, and I think it's really unhealthy. But it really is just, I think, a part of human nature. Like tribalism generally is a part of human nature, and you see this expressed throughout society when it comes to like people and their sports teams, you know, and they'll get like really intense about their sports team being the best one and every other team being bad. Or you'll see it in politics where, you know, someone's political party is all great and the other side is a total villain and enemy. You see this in religion, and that's just part of humanity. I think that's how humans evolved. But I would hope that people can be reflective enough to realize that even though that is a tendency of humans, that you shouldn't be like that. You should generally assess things on their own merits, and there is generally nuance. It's rarely the case that one thing is perfect and good and another thing is a villain or evil. It's a very simplistic way to view the world. So I hate to see that seeping into parts of the Bitcoin community.
I guess what are the core arguments they're using against Ethereum, and do you view those things as growing pains?
One of the core arguments that the maximalists make against Ethereum is that they say it's not decentralized. They say Bitcoin is the only decentralized blockchain, nothing else is decentralized. This is a silly thing to say because decentralization is not a black and white thing, it's a spectrum. Things become more or less decentralized. Bitcoin has become more decentralized than it used to be. Ethereum has become more decentralized than it used to be. So these things exist on a scale. And when you can't measure decentralization with any clear metric, it's very easy to just dismiss a project you don't like by saying it's not decentralized. Empirically, Ethereum is decentralized. No one can turn it off. No one can make a unilateral decision to change the rules. It's just a different model than how Bitcoin works, but it's still a decentralized model.
The first version of a decentralized system that was successful actually predates Bitcoin. It was called BitTorrent. It still runs today because there's no off switch. The litmus test for decentralization is, does something have an off switch? Meaning, if a government is motivated, can they shut it off? You cannot shut off BitTorrent. The record labels tried. Once they realized they couldn't shut it off, in their infinite stupidity, they started suing consumers who were using the BitTorrent service to share music with each other. That was a bad idea because then everybody hated the music labels even more than they did before. It just proves that decentralization is sending a clear message that when it works and there's no off switch, the people are ultimately in charge. That's what's so powerful about the decentralization movement.
What we're about is creating an ecosystem, not one that we control, but decentralized ecosystem where people can own and monetize their data if they want to. And I think even how we think about data and slice and dice it, like if you think about your DNA as being part of your data, well, your DNA is very valuable to lots of people who could actually be ensured that it's anonymized. You could before they get it, but now as part of a study of DNA, is valuable to lots of different medical researchers. And so why wouldn't you want to sell it and monetize it? And if you don't, that's fine too. But it's about, I think, giving people an opportunity to make money from their data and get compensated for it instead of today their data is being used, but they don't know about it and they're not compensated for it.
Big part of the power of blockchains is that they're decentralized. They're genuinely decentralized. And when something is genuinely decentralized, you never have to worry that you will wake up one morning as a business and discover that you're just a minor player in somebody else's ecosystem. So think about what's happened to, say, taxi companies in the world of ride sharing. Taxi companies used to make money from being taxi companies, and now they're entirely at the mercy of a small number of very big companies in this space, right? And those companies can change the rules because they control those private networks. That's a scary thing for a lot of companies, and so they shouldn't want to sign up for a private network. Now, that leads you to another interesting problem, which is, okay, if I don't want to sign up for somebody else's private network, should I start my own? Well, everyone tries to do that, and it turns out that doesn't work either, because for every one person who's willing to join somebody else's network, it turns out that 2 other people started a private blockchain, which is also completely pointless. What's the point of having a network if you can't get anybody to join it? So in the end, the only type of blockchain that's really worth having is a public blockchain.
The other thing that has surprised me is that I thought the forks of Bitcoin, I thought the fact that you could take this open source software and create your own currency I thought that would diminish the significance of Bitcoin, because I thought that if you could just create your own new Bitcoin or currency, the allure of Bitcoin itself would diminish over time, because it would have all these competitors and people would put money into those other ones. But as it's happened, people put money into all these competitors, and then they put even more money into Bitcoin. And I thought that was going to hurt Bitcoin.
Ethereum is amazing, 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 amazing tool for the entire world. And we've seen this in fantastic new ecosystem develop on top of Ethereum. One of the big things that really got Ethereum kicked off was this ICO thing. And basically what that did is it allowed any investor anywhere in the world to be able to invest in any entrepreneur anywhere in the world. And there was nothing that any politician could do to stop it or block it or control that in any way. So that was an unleashing of this huge amount of additional economic freedom in the form of this economic tool on top of Ethereum to enable that. It was fantastic for the entire world. But one story that a lot of people probably won't realize is that Vitalik Buterin, the creator of Ethereum, wanted to build all of that on top of Bitcoin. And all of those tools would have been built on top of Bitcoin if not for Blockstream and Bitcoin Core limiting the block size to 1 megabyte. And so Vitalik looked at Ethereum and saw the arguments going on over the 1 megabyte block size limit, and he said, well, I guess I won't build Ethereum on top of Bitcoin. I'll start my own chain, which actually is kind of a good thing, right? Now we have thousands of different cryptocurrency chains where people can build all sorts of products, and Ethereum has launched all sorts of things on top of Ethereum, and now there's all sorts of Ethereum clones out there as well. You have the Binance Smart Chain and Tron and this and that. There's a whole bunch of them out there competing for share in the market. So cryptocurrencies as a whole now are more decentralized because you have all of these things out there. And so I'm glad to say, I bought a bunch of Ethereum early on as well, and I'm a big fan of Ethereum.
And I'm curious your take on the community. Have you been impressed by and I guess we'll pick Ethereum for now, but have you been impressed by that community and how far they've driven these initiatives?
I've been incredibly impressed overall with the Ethereum community. I would say if there's one thing that we had a challenge with early on, it's that many of the developers in this community didn't understand how important privacy was to enterprises. I think they definitely understand that now. What I've really appreciated is I've engaged with the Ethereum community a lot at DevCon, on Reddit forums, and I used to be kind of nervous about going on Reddit. It kind of had this reputation as like they're just going to eat you alive. But actually what I found was, especially in the Ethereum finance forum on Reddit and the Ethereum forums, people ask really smart questions. They understand the technology extraordinarily well. They have really good suggestions. It's a community of experts who are passionate about kind of building something. And I think the Ethereum community especially has been incredibly constructive and is full of some just remarkably smart people.
From what I understand, there's 10,000 plus developers have contributed to Ethereum.
Yeah, and it's only growing. So Ethereum, I feel like that's the whole purpose of decentralization, creating decentralized blockchains, because everyone has to know what's happening. And if you create a blockchain that is not open, no one can know, why is it controlled by someone else? Or what's actually happening behind the code. No one can see that, but that's not the case with Ethereum or any of the majority of the blockchains out there is open source. So that's because it goes back to the core principle of everyone has to know what's happening and everyone controls the network. So power to the people, basically. And so just like you said, 10,000 plus developers and growing. And developers are constantly contributing, and I have no doubt in saying this, and majority of the developers, or at least good chunk of the developers out of that 10,000 contributed for free because of the same principle, because people want to see Ethereum grow, because they want to contribute, they want to see how it goes to the next level, how we can help. And even myself contributed to main get code multiple times over the years. Even though it's obviously, not paid or anything, I just saw a problem and I wanted to fix it. And the easiest way to fix it, even though I know the core developers, the actual developers of core Ethereum, the easiest way to fix a problem is not getting on a call or sending them a message and telling them the problem. Go fix it yourself, because I know how to code, so I can go do that.
Because these systems are decentralized, the coordination can be very difficult. There's no one that is in charge of Bitcoin. There's no one that is in charge of Ethereum. the creator of Ethereum, Vitalik, has a lot of influence, but he can't unilaterally change things in the system. And because of that, you get a very interesting dynamic of how disparate parties in all places of the world, many of whom have never met or who don't know or trust each other, how they actually figure out what to do with the system. And it's a beautiful example of spontaneous order, where you end up having rules and process and structure, even though there is no top-down governing mandate or authority. And this is very different than how any kind of central bank currency would work, where someone is in charge of it and the rules are whatever that person or group says it is. So it's a messier process, but it's also one which is far less susceptible to corruption and is one in which anyone in the world can get involved in and influence and participate with.
It is amazing to see that somebody can build a new protocol or a new smart contract in their bedroom, launch it overnight, and basically hundreds of millions of dollars jump into that to either create yield or consume yield. And so it's definitely something that is great to see. Again, all these projects are relying on many Lego pieces that have been built across the last 12 years. For example, without Bitcoin or Ethereum or smart contracts, none of that could come to be. And but it's not new. Like if you look at, for example, WhatsApp, I think they had something like 11 employees when they sold to Facebook for $20 billion. And they had close to 1 billion users. And now they have over 2 billion users, right? So when you have the infrastructure already built, you don't really need that much to innovate on top of it, right? You can create apps or dApps, distributed apps, with not that much work. And what matters is the idea. What matters is that seed that changes everything, changes how you issue loans, changes how you transact or exchange tokens. And that's the rapid innovation that we're seeing in DeFi that is not happening in traditional finance. So that's really the opportunity. The opportunity is to invent these new ways to do business on top of smart contract, instead of using intermediaries and governments and regulators and contracts the way we did for the last 700 years of banking.
The problem was when Ethereum first came out, it was difficult. Like no one was able to do anything in Ethereum, not an average person. But I already had the knowledge, like a deep understanding of how it's working. So when I saw these problems that people are having, average people are having, of like transacting Ethereum, sending these tokens or whatever, I wanted to help them out. So I created, like 2 weeks into the mainnet launch, I created a website called My Ether Wallet to help out these people. Basically, only thing that I was able to do is creating a wallet and sending Ether to another person. And immediately it got traction. People were thankful, people were grateful. They wanted it to have more features. And that's basically the beginning of My Ether Wallet. Now it's the leading wallet interface in in Ethereum space. Basically, it's a nexus point in transacting Ether and Ethereum, anything in Ethereum ecosystem. And so now I'm the founder and CEO of My Ether Wallet, and that's what I've been doing for the past 5-6 years.
How are you seeing the speed of development there, and maybe say from 3 years ago to 2 years ago to in the last year?
So there's a very predictable pattern that's emerging in blockchain that is, I think, is repeating itself from what we saw at the internet in general and the cloud, right? The first phase is slow and painful. And when you survey their results, you think, wow, this is lame, right? This is worse. The blockchain version of this is worse than the previous version I had. And by the way, it was the same. I remember spending an entire weekend ripping every one of my CDs, right, onto my hard drive, and then the hard drive crashed. And I thought, this is insane. Why am I doing this, right? We're doing this for the love of the technology, because it's certainly not more convenient than what I had before. It's the same with blockchain or any other system. The first version, it's slow, it's difficult, and it doesn't seem to work very well. And by the way, that was true for early smartphones as well, right? You got this like gigantic brick, it was incredibly expensive, and it was barely functional. And the miracle of this is you start with these basic building blocks. And the first version seems really clunky, and the second version seems kind of okay. And then we start doing really cool stuff, right? At first, you just have a Lego block like a smart contract that defines an asset. But then those assets become interchangeable, and all of a sudden you wake up one morning and you discover not only do you have smart contracts that define assets, but you have smart contracts that run on top of those that do things like enable loans, or pay interest, or allow deposit, or give insurance. And then you can start to mix up even those Lego blocks, which is, okay, if I can have a smart contract that pays loans and pays interest on assets, and I can have multiple of those services, then I can create something called yield farming, where it'll move my assets to the best return every month or every week. So all of a sudden, you start with something that seems slow and clumsy, you get to something that seems pretty good, and before you know it, you have something that is much better than you could have possibly imagined in the prior existence.
With Ethereum, you can actually run programs anywhere on the internet and not actually know where the program is running. And these programs, we now actually call them smart contracts. And they're smart in the sense that once they're out there on the internet, they automatically run, and you simply can't stop them.
Can your supply chain system be an identity system? Can it be a voter registration system? Can it be a property system? Can it be a payment system? Can it be a credit system? Can it be an insurance system? Can we do our fertilizer vouchers on this? Et cetera, et cetera, et cetera, and so forth. And what's so cool is our industry does all of that. When you talk about a blockchain, it's just this immutable ledger that's time-stamped and auditable, and it's irreversible. So it does not care about what you put in it. It can be an identity, it can be money, it can be a coffee bean, it can be a donkey, it doesn't matter. And then you have a business logic that sits on top of it, and that solves a particular problem. And if you have smart contracts, you can program all of that up, just like when JavaScript came to the web browser, you create a web application or a cell phone application. You can now do the same thing. So voting is not a system, it's an app. Money is not a system, it's not a central bank, it's an app. Property is not a system, it's an app that runs in this common infrastructure that's now interoperable with America's system. So you might not have even designed for that or thought about that, but because you have that standard, the money you issue for your farmers, for your fertilizer voucher is understandable in Seattle, isn't understandable elsewhere. And you might have not wanted that, but now because it's there, your user is going to take advantage of that.
The reason it's hard to talk about Ethereum is because even Ethereans, the builders and the fans of this network, didn't really know what it was good for the longest time. It's been around for 5 years, and it's sort of only in the last year that people figured out what it's really suitable for. And the main thing is these hard-coded, more complex financial contracts, derivatives, insurance, swaps, options, things like that. Basically contracts that can be transmitted into code and deployed on the blockchain such that users interface against an algorithm instead of facing off against an investment bank or a law firm where these contracts are typically drafted up. And so that's sort of what it's good for today. It could be a number of things in the future. See, the primary thing Ethereum is good for is this sort of decentralized finance concept, which has really taken over. But at inception, the people creating Ethereum didn't know that that's what it was going to be used for. It was just this sort of organic process of discovery, basically.
What is this new revolution of DeFi, and what exactly is it, and the product offerings that fall underneath?
Sure. So there are many definitions, and it's a spectrum. It's not really one company or one definition, because there are purists who basically believe that DeFi is only something that runs on a smart contract. No human is touching it. It's a DAO with an autonomous machine, and so on and so on. But I believe that anything that is not traditional finance, right, that is not falling into a double entry accounting system, right, where you have an intermediary making all the decisions for you, anything that is not that, anything that is a triple entry accounting is DeFi, right? Because basically 99% of the population. You know, if there's 7.8 billion people on the planet, 7.79 billion of them cannot do DeFi. They don't know how to manage keys. They don't know how to farm. They wouldn't know where to go. They don't know the difference between a private key and a public key, and they're just going to lose their money. Also, they don't have enough to even cover for the gas fees, right? So aggregating all of them, giving them a platform that they can use that looks just like their bank app or just looks just like some other app that they're using is a much better way to bring those people and get them on the bridge from traditional finance into DeFi. So, you know, when I created Voice of IP, one of the largest challenges was to hide all the complexity of TCP/IP and UDP and all of the networking that you need to do to actually establish a voice call over the internet. And like right now, we're using VoIP, and you don't have to know anything about these protocols. You don't even know. All you do is click on my image on the invite, and magically we can sit and talk for 24 hours. So the same thing has to happen with DeFi. We need to strip down all the layers. We need to deliver the utility, which is store value, yield, and cheap loans. Those are the three things we need to deliver to the customers and hide away all of the complexities that is involved with the blockchain and the ledger and smart contracts and so on. So for me, DeFi is a much broader definition than for most. And again, CeFi or centralized finance and DeFi are two sides of the same coin. And basically, we believe that building bridges between traditional finance and DeFi is our job. It's not about just creating stuff inside the DeFi environment and making that available to the OGs or to the people who got there first. If we don't bring billions of people across that bridge with all their capital, our own coins are not going to increase in value. So that is why we have one leg in centralized finance and one leg in decentralized finance.
What if you look out 2, 3, 4 years, what do you think will change or continue to evolve?
I think what you're going to see is the evolution of DeFi, for sure. There's a long way to go in that. It's an amazing experiment. There's a lot of cool products out there. It's amazing. That's said, there's a lot of problems with it as well, so that has to grow up. Whether it's soft maturity models, meaning like, I don't want to invest in some DeFi product, you know, and I could be a new investor or a very experienced one. And it goes boom because it had a security problem and somebody stole all the stuff out of it, right? I don't want to have that. So there has to be software maturity models. I think there has to be some form of potentially know your customer in it, and we're seeing glimpses of that. But I think DeFi will become a huge product for people. I'm hearing from banks that want to offer their retail banking customers, so you know, anyone who's got $2,000 in their bank account, the ability to access crypto funds, store them safely, and then put them into verified DeFi projects and, you know, earn interest on them. I could earn 4% interest, I could stake, et cetera, and have them in a safe manner that allows everyone, mom, pop, brother, sister, to get access to those products. So that's what I'm seeing. That's changing the world, and I think in 4 years you're going to see that across many of the major banks in the world, most of the major brokerages, obviously all the small new financial services companies, you know, already offer crypto, but that's going to grow tremendously. So I see a bright future over the next 4 years.
I use Ethereum basically daily as well, but Ethereum at the moment is having scaling issues for technological reasons. Bitcoin is having scaling issues for social reasons, but I'm a fan of absolutely anything out there that works. And Ethereum has been a fantastic tool that's enabled all sorts of fantastic things all over the world, and that's why I'm a big giant Ethereum fan and an Ethereum holder and user as well. I use Ethereum daily in my business.
So I just want to kind of give the audience in the most simple terms, and can you define what proof of work is and what is going to become proof of stake?
Yeah, proof of work and proof of stake. So Bitcoin uses a proof of work system. This means that the miners, who are basically processing and validating the transactions, are using an intense amount of computational resources to find a solution to a certain math problem, and whoever finds that first gets the privilege of making the next Bitcoin block. It's a tremendous amount of energy that goes into this process, and that's why it's called proof of work, because you actually have machines doing work to prove that you have committed resources to making the system trustworthy. Some people, not including myself, have a problem with that for environmental reasons. They believe that that consumption of energy is a waste. Personally, I think that consuming energy to create the most important monetary standard for the world is a pretty good use of energy, even if it's not the most perfectly efficient. And so some people have gotten very excited about an alternative, which is called proof of stake. In proof of stake, instead of the miners putting up work or energy to prove that they are acting in a good way, you put up the token or the asset of the system itself. So instead of having a bunch of servers, you have a bunch of coins of the asset and you stake those. It's basically your skin in the game. And if you've staked those assets, then you get, part of the right to approve the transactions that are happening in the system. These two systems both have some trade-offs. I think both are legitimate in certain ways. Proof of work is definitely the more conservative way to do it. And Ethereum is moving to proof of stake. So it started as proof of work. Today is still proof of work. But Ethereum will be moving to a proof of stake system. This is a very highly risky move for them to do. But if they do, it'll be a material difference between Bitcoin and Ethereum, that they will have different algorithms for how they find consensus.
Proof of stake is just a fancy way of saying they who have the most financial resources have political control over the system. So people posit proof of stake as sort of an upgrade over proof of work or an alternative to proof of work. It's actually just the way the current system works. We live in a proof of stake system where if you have lots of money, you can influence politics, right? You can donate to political campaigns and then achieve favorable political outcomes. Proof of stake is the exact same thing. So saying proof of stake is going to solve proof of work doesn't really make any sense, because proof of work is the economic system that allows you to have no leaders. To switch to proof of stake is just to say, okay, we're going to elect leaders and we're going to entrust them with the safety of this system. But you haven't solved anything by doing that. You've just gone back to the old system. So I totally reject this portrayal of proof of stake as an alternative or an upgrade to proof of work. Proof of stake is regressive. That takes us back to the way these financial consortia used to work. SWIFT and Visa, these are consortiums, right? Where, you have corporates and various foundations that run them. That's not a free and open system like Bitcoin based on proof of work, where there is no one that's in control of that system. So I don't see them as actually categorically the same kind of thing at all.
Bitcoin was the first generation, and really the problem that they were trying to solve with Bitcoin was this idea of a decentralized system to push value around. It's like email for money. So you have this concept of a Bitcoin, and I can send a Bitcoin anywhere in the world to anybody. Very easy, just click a button. The problem with Bitcoin is it doesn't really do much more than that. You can't do pull payments, you can't have things that are not Bitcoin in the system, you can't program stuff, and you can't do contingent transactions, like if you mow my lawn, then I pay you Bitcoin, this type of stuff. So it's kind of blind, deaf, and dumb in that respect. So it kind of begs another generation. And it's kind of like when JavaScript came to the web browser. Before that, you had these pretty static websites. Maybe you'd have like GIF flames or something, but you couldn't do YouTube. You couldn't do Facebook. You couldn't do real interactive, great experiences. Then JavaScript comes to the browser, and then suddenly everything changes. You have programmability. You can do all this crazy stuff. E-commerce is possible. Huzzah! Well, similarly, when a programming language comes to a blockchain, case of Ethereum, the second generation, then you could do ICOs, and you could issue tokens, and you could do DeFi, and you could do STOs, and you can do all this stuff. The problem is it doesn't scale. The systems are replicated, so you can't go from 1,000 users to 1 million to 1 billion users and expect the system to still perform. Second, it's not interoperable. So there's over 8,000 blockchains in the cryptocurrency space, plus the legacy financial system. Could you imagine how bad Wi-Fi would be if it only worked with your device? Only Apple routers work with iPhones, only Google routers work with Android phones. It's like you'd never connect to the internet because you'd never have the right phone. But it works with everything.
A lot of people go, oh, well, is the innovation blockchain technology? Or can we take this blockchain technology and build other things with it? We don't have general purpose tools for everything. A shovel is only good at certain things, and same with the tank. A blockchain is very, very, very narrowly defined as being good to create like a money. It's a very narrow surface area, just like a shovel's only useful for one thing. And so when people say, oh, I think I can build other things with this blockchain technology, yes, you can, but it is sort of you're going outside the parameters of how it was originally built and conceptualized, and that introduces a lot of other variables to it. I want to process 1 million transactions per second. I can only do that if I have like a big bank server, which means that someone centrally controls it. So there's different design parameters that you can tweak with blockchain technology to add innovation to it. More transactions per second, smart contracts, or more permissive smart contracts. But each one of those has a trade-off. And most of these protocols aren't genuine with describing the trade-off that they're making. They're like, look, we improved Bitcoin. It's like, well, you didn't improve it or damage it. You created a new version of it or a different version of it, but you sacrificed this for that. And they'll almost never tell you about what they sacrificed, and what they typically sacrifice is decentralization.
Which is better, Bitcoin or Ethereum?
It's like saying which one is better, water or air, right? Ultimately, we need both, but for different reasons, right? Ultimately, to live, we need both. But we need a digital gold, in my opinion, because we need a stable store of value. We can no longer trust governments to manage the money supply effectively and responsibly, right? But at the same time, we want a decentralized world. We've seen what happens when Twitter and Facebook and other social media services either advertently or inadvertently interfere with elections, or others can abuse their system to interfere with elections. That's why I think there's going to be a massive movement towards what we call decentralization. I believe the future is decentralized. You can't have decentralization without something like Ethereum to run all of these services on.
Now that we see what is possible as people can design and launch their own coin, our next episode will explore how innovation goes up against hype in a bubble destined to burst. I'm Patrick McLean, and this is the podcast Coins.